Hello there, friends. This is Jerry Robinson from Follow the Money Daily, ftmdaily.com on the web. I just wanted to show you a free online investment tool that I've been using now for some time. It's really just a screener, which you can find in many different places online, a stock screener. But this one is probably one of the more comprehensive ones that I've run across for free, especially. I pay for other screeners that cost more money, but this one's free. And so I wanted to share it with you. For those of you who are new to investing, maybe you have no clue how to handle a stock screener. Maybe they're intimidating to you. Well, this one looks somewhat intimidating when you look at it, but let's just go ahead and go through it together, and I'll show you real briefly some of the criteria that I look for when I'm looking for a good growth stock, and I'm looking for something that I want to hold for, probably for 24 to 36 months. I'm wanting to gain exposure to some good growth stocks. Of course, I use my own trading system to get in and out of stocks, but this is how I find stocks that I want to put in my portfolio. So what you'll do is you'll come to finviz.com, that's Finviz.com, and then just click on the screener option right here. And then when you do, you'll see this screen here. Let's go through these real quickly. First of all, you'll see there are a few tabs up here at the very top. Fundamental, technical, and all. When we click these, they just show us different options that we can have. We'll just go ahead and go to the descriptive to begin with. And we'll look here and we'll see that it's displaying 6,951 stocks. So this is showing us pretty much the whole universe of U.S. stocks right now. So let's go ahead and limit this by deciding what we want to focus on. Now, first of all, we can focus on the exchange. Only want to find stocks on the American Stock Exchange, the NASDAQ, or the New York Stock Exchange. That's not important to me, so I'll leave that alone. Market cap, I'm going to have to say that I probably want to go with something over 50 million in market capitalization, size-wise. So I'll say plus micro there, and that'll whittle it down to 4,500 stocks you see here. The next thing I want to look at here is we could say earnings date. We want to have earnings real close, or we want to wait. I'm just going to leave that alone. I'll look at that later. Average volume is very important to me. I want to see at least 400,000 in average daily volume. So I'm going to add that, and you see that it cuts our number drastically down to 2,000. So now we only have 2,000 stocks to look at. As far as the dividend yield, that's not important to me. I'm a growth investor here on this particular video, so I'm not going to focus on that. Sector, if we wanted to drill down by sector, this is very powerful, or by industry. And we'll show you in a later video how to actually use that. Analyst recommendation, if you want to focus only on stocks that have strong buys from analysts, then you can do that. I'll give you an example. If you say buy or better, it shaves off about 15 or about 500 stocks off of your list. So let's go ahead and do that. Let's just say buy or better. As well as current volume, we're not going to worry about that. Now, price, anything over $12, $10 to $12 is usually what I like to trade. I don't like to trade the real small stocks. I mean, you can, and I have, and I do. But when you're just a new investor and you're looking for a good growth stock, let's try to stick with the stocks that have a little more price to them, and they're not penny stocks. Okay, so now we have about 1,000 stocks based upon this criteria. So those are very good ones there. I don't think we have anything else on here we need to look at. So let's go ahead and go to the fundamental tab. When you come to the fundamental tab, it's a little different whenever you're a strict trader than whenever you are a long-term investor. Of course, traders, especially day traders, they could care less about the fundamentals of a company. Many times they just want to get in and exploit the price movement. Well, in this case, we're going to probably be holding the stock here for some time as a growth investor, so we want to focus on a few things. There is PE and forward PE, price to earnings ratios, and to me, those don't tell me a lot. I prefer the PEG, PEG. This is the price to earnings ratio to growth ratio, price to earnings to growth ratio. And this helps you understand how the earnings that a company is creating actually is relative to its growth rate, and that's very important. So with a PEG rate, the closer that you can get to 1, the better. If I'll just say under 2, obviously I would like for it to be 1 or even lower. If you are at 1, if you have a 1 PEG, then you are considered to be perfectly valued. If you are less than 1, then you are considered to be undervalued. And if you're over 1, then you're considered to be overvalued. Well, it's very difficult to find good low peg stocks right now in this frothy environment. So we're not going to be real strict on that. Let's say if we said only those below 1, we would be cut down to about 118 stocks. Let's go ahead and do under 2. That leaves us about 475 stocks there. There are other metrics here. If I was a value investor, price to book ratio would be very important to me. I would want that to be close, to 1, not very high at all. I want to keep that low. But I will tell you as a growth investor that one of the most important things is the earnings per share. All stock prices are driven by the underlying earnings. And so earnings is very important. So we want to see earnings per share growth this year. We want it to be positive. In fact, I would even say we want it to have at least 15%. So we'll say over 15%. Earnings per share growth next year, same thing. We want to see, good earnings per share growth next year as well. Now, how about the earnings per share growth next 5 years? This is a bit more difficult to really calculate, but let's just go ahead and assume that we want that to be positive, and let's say over 15% as well. Another very important metric on this list is the return on equity. This is in essence what a company profits. This is how they return the money to you, so to speak. And so let's take a look here, and let's probably keep this above 15%. My personal preference is 20 to 25, but let's not be too picky at first. Over 15 is good. You could always look at the debt to equity ratio. If you want to have a low debt company, you can certainly do that. If you want to focus on high debt companies in case you're trying to short a company or something, you can do that as well. But let's just go ahead and leave that alone for now. Institutional ownership is very important, but I found over time that as a growth investor, you want to try to find companies that don't have, or that haven't attracted, I should say, a lot of institutional ownership. You want to leave room for more investors to come in, institutional investors, and come in and buy the stock. So let's leave that alone for now, and I'll show you how to look at that here in just a minute once we actually get our results. Let's see here. What else should we look at? Long-term debt to equity ratio. Let's see. Sales growth quarter over quarter and EPS growth quarter over quarter. Let's go ahead and force these to be over 15% also. All right. So now you can see you really have quite a few criteria set here. We could get a lot more detailed on this, and you can always go down. And if you're not sure what something means, just mouse over the word, and you'll get a definition. Then you come over here to your technical area. And I've always believed that fundamentals help you understand which stock to pick. Technicals tell you when to buy. So fundamentals of a company are the balance sheet and the income statement, the things that really matter, the money that's actually being made. So fundamentals tell us the story. It helps us find the stock. But technicals are the things that help us know when to buy that stock. So some of the things we would want to look for, I like to personally see a stock that has a 50-day moving average above its 200-day moving average. And so I'm going to go ahead and put SMA 50 above SMA 200. That means simple moving average, SMA. So let's go ahead and have that set. That way we know that the stock is probably in an uptrend. We can even go a step further if we wanted to, and we could say have the 20-day be above the 50-day as well. So let's go ahead and do that as well. 20-day above 50-day. Now that has really narrowed us down here to a list of 7 stocks. Let's see if there's anything else here that we want to pay attention to. There really is. I mean, we could spend a lot of time going through each one of these, but I'm just giving you a real quick idea of what you can do here. Let's also let's take a look at this All tab, and you can see all of them together, all in one place, which is kind of nice. Now, let's just go ahead and drill down. Let's assume these are the 7 stocks that we want to look at. I want to show you what you can do with them now once you've actually screened them down. You'll notice there are some interesting menus here. There's valuation, financial, ownership, performance, technical. Let's go through these. First of all, we have the overview. We have 7 stocks here, And if we mouse over them, we'll get charts. And those of you who have been using our trading system, you can begin to look at these charts and begin to even see opportunities within some of them. And so we first, kind of look them over. We obviously pay attention to their sectors. We notice that there are two in healthcare. One of them is a biotech company. And this might be important to us if we are using some sort of sector rotation strategy and we're trying to stay in strong sectors. We also see the country, and then we see the market cap. We can sort them by market cap to see which one's the biggest and which one's the smallest. We can also sort them by PE or by price and even by volume. Now, let's go ahead and click on the valuation, and let's see here. Here's where you can really get down and compare all of these stocks by their PEG ratio, or you can compare them by their price to book ratio, or you can compare them by their earnings per share this year, next year. What are they expecting? Next 5 years. And so you're able to see these stocks. And one of the other nice things about this screener is that you could say, I don't want to screen for all this. I just want to compare two stocks. Well, the way you would do that, let's say you were trying to compare IBM and Microsoft and trying to figure out which one's better for you. Well, you would just type them in, comma separated, and click there, and that would, of course, would just show you those two stocks. Okay, so now let's go ahead and move over to the financial tab. And the financial tab, again, gives us more information. Here you have dividends, any relevant dividends. You have return on equity, ROE, which, again, is very important. You can also separate by debt to equity to find out how much debt they might have, their earnings date, also ownership, which helps us understand the institutional ownership and the insider ownership. Now, let's pay attention to this for a minute. The institutional ownership, the higher that it is, in some ways that is a good thing. Here you have Ulta, for example, and 97% is institutionally owned. Well, that means that there's not too many more institutions that can really buy this company, in other words. It's pretty much an institutionally owned stock now. So that means that it can really only go down from here. If Ulta puts in some bad results, it may lose some institutional owners, and that would cause a lack of demand for the stock over time. So that's not a good situation. We like the fact that it has institutional ownership, but we like to see a stock that perhaps is growing really quickly, meeting a lot of good criteria, but it's not as heavily institutionally owned, meaning that there are more institutions that can begin to add it, and then, of course, that creates more demand for it, and it drives the prices higher. So institutional ownership is an interesting thing. You do want it to be high, but there is a huge benefit to having a stock that is attractive, but kind of off the radar for institutions. And so that's something to consider when you're looking at that. You'll find that underneath the ownership tab. Then there is the performance. You can compare them by how they've performed year to date, over the last year, whatever the case might be. Technical, you can see how far extended they are from their 20-day moving average, their 50-day moving average, and their 200-day moving average. These are the only moving averages used within Finviz Screener. You can't look at 10, you can't look at 30. It's only 20, 50, and 200. And those are fairly good for the average trend trader. We also have a very nice ability to look at each of these charts. Now, Finviz will draw, as you can see, these drawings are not mine. They're from Finviz themselves, and they draw trend lines. They're not always the best trend lines, and they're not always accurate, but they at least give you a guide. They help you visualize what the stock is actually doing, whether it's in an uptrend or a downtrend. And certainly here they've done a good job of capturing that support line that exists right there. So that kind of gives you an idea of what the charts tab is all about. And as you go through here, you'll see that there are some different things. If you want to get the chart view along with all of the financial data here, you can also look at news headlines that are relevant to the company. So very nice free tool for those of you who are trying to find stocks in this environment that may be meeting your particular criteria. Finviz offers a completely free way to do it. So there you go. There's a video on Finviz Screener. We'll do another one on Zacks.com. They also offer some really neat free tools. We'll talk about those in another video. Until then, God bless.